Hello all, I hope you're well in these extraordinary times. I'd like to welcome you all to the Fintech Finance Virtual Arena where we're hosting you today. Joining me is Alison Harwood, who heads up the London branch of Varengold Bank. Hi Alison, I hope you're well, and again, thank you for joining me. Alison, would you be able to give me and our viewers a bit of a background to Varengold Bank and your role within it?
Yeah, absolutely. Hi Doug, thank you for having me on the show. Varengold is a German bank and we are a partner to Fintechs. We provide Fintech Lenders with financing and fronting solutions across Europe. And I head up the London branch for Varengold and cover Western European markets for our Fintech Lending business.
Absolutely amazing. And I mean, what a time to really be in the kind of financing side of things, because the whole world seems to have gone a little bit crazy for obvious reasons. And, speaking of which, on these virtual arenas, we've been learning all about what the fintech industry can do for other industries, what it can do for retail, for individual people to help them out with COVID-19. But I'd love to hear your perspective on what COVID-19 has done to the fintech industry.
Yeah, I mean, I think it's a fascinating time to be both in fintech and in lending at the moment because it's a real opportunity for the industry. We've already seen fintechs get involved in government-backed coronavirus schemes. We've seen them pivot their models very quickly, and much like we saw in 2008, I think we'll see them really have an opportunity in the current environment to step forward even more and support credit for both consumers, small businesses, property lenders, etc.
Yeah, I can imagine. And within that fintech ecosystem, Varengold plays a very interesting part. Can you give me a bit more of an in-depth background as to where Varengold sits within the fintech ecosystem and what you can provide the fintechs?
Yeah, so our core client base are Fintech Lenders, and we're essentially a lender to lenders. So we don't do any direct lending ourselves. What we do is we partner with Fintech Lenders across Europe to help them grow their portfolios and expand their business into new markets, both with the financing to grow portfolios and with fronting solutions to allow them to operate under our regulatory umbrella and make use of our back and middle office functions.
Brilliant. I've got to ask a bit more about, because obviously with COVID-19, there's been such a change to how governments have had to interact when it comes to looking after fintechs. That regulatory compliance, what do you think has changed for a lot of fintechs due to COVID-19 when it comes to regulatory compliance? We've seen, especially for the retailers and the payment side of things, SCA got postponed. Do you think there's going to be other things when it comes to lending?
Well, I think when it comes to lending, we have seen coronavirus throw up opportunities to participate in government-backed schemes, which I think has been a really exciting development for the industry. And I think that's had relative degrees of success when you look in different markets. I think the British Business Bank has come under a little bit of flack for not getting fintechs onboarded quicker. But relative to their counterparts across Europe, I think there is a decent representation of fintechs and alternative lenders that have been onboarded onto the CBILS and BBLS schemes to facilitate the rollout of funding under those schemes. We've been very active with the KfW in Germany in helping German fintech lenders to access that scheme, which can only be done with a partnership through a house bank. So we're the first fintech driving house bank to have been onboarded by the KfW to make sure that the alternative lending ecosystem out there has not been left out of those programs.
I mean, that must be a huge achievement, because alternative lending is saving a lot of businesses, people's livelihoods, because maybe they've been left out typically by the kind of older school traditional banks. But kind of going back to your role slightly, and you touched on it there, and obviously because you've got that partnership with the German bank. Can you tell us a bit more about how that plays out? Being a German bank, but also leading the UK side of things. What does that mean for you?
Yeah, sure. So we've had the bank has recently celebrated its 25th anniversary, but actually we only got our banking license 7 years ago. So we really see that as a marker for when the bank started to become what it is today. And we've had a branch in London since the bank got its license. So there's always been a strong focus on the UK, both from an organisational perspective and from an industry perspective, where there is so much innovation that is born out of the UK market that then translates in its own ways across the continent.
Yeah, I can imagine. And for our viewers, could you maybe give them a breakdown as to what the fintech lending scene and marketplace scene is like in the UK compared to Germany?
I mean, I think it's definitely more developed, and the penetration rates are much higher. I think as a population in the UK, consumers and businesses are relatively early adopters of technology and fintech solutions, and obviously we've got the support of the FCA and initiatives from government like the IFISA, etc., that have really created a home for innovation in the UK, which I think has been a little bit slower on the continent, but there are some really, really interesting businesses that have sprung up over the past few years and are gaining some great traction over on the continent, and lots of new players up and coming as well. So we think the continent is a really exciting place to be at the moment.
Yeah, there seems to be it always seems like another one of the large fintech unicorn banks is coming out of the continent, and obviously we saw N26 start to make their move obviously to the States. So I mean, it does seem to be quite an interesting time. Now, speaking of the various different financial services verticals in the industry, where do you think lending has found an opportunity to help succeed during the virus? And help other people and businesses out, unlike any other time ever before?
Yeah, I mean, I think it's been an opportunity for fintechs to show how agile and nimble they can be and how quickly they can respond to changing market conditions, and not only to adapt their product offering to better service their clients during this current time, but maybe to roll out new products to quickly get themselves accredited under these government schemes, which is a process that would in normal times take months and months and months to do. So both credit to the fintechs themselves for going through that process, but also to the British Business Bank for quickly expediting the access for fintechs to that program. So I think it's a great time and has been a great time for them to showcase what they can do, and I think they will become more important than ever over the coming months. I think we will see, much like 2008, that traditional lenders will pull back on their credit appetite, and I think it's a great time for fintechs to showcase the features of their credit underwriting and scoring processes that can use integrations with accounting software. They can use open banking. They can more quickly draw on wider data points than traditional lenders can, to still be making sound and sustainable credit decisions but be able to still get that money out of the door to customers that might be left behind by the traditional lenders.
Yeah, I can imagine. And just before we kind of talk about and go on to the whole kind of almost mirroring of 2008, could I actually follow up with you in terms of obviously you're lending to lenders. So I've got to ask you, where does the risk lie with that, especially considering that because of the virus, some countries are going into recession?
Yeah, absolutely. So we are a senior lender. And it's very important to us that we always have a strong alignment of interests with the partners that we're working with. So there will typically be a first loss piece in place from the originator that keeps them strongly aligned with us in ensuring that the defined credit quality we think we're getting will be sustained throughout the life of the relationship.
Brilliant. And yeah, going back to 2008, you mentioned obviously a lot of the traditional kind of lenders suddenly found themselves in a very different space. Now, was that change obviously due to the downturn, but was it a technological change or was it more of a cultural change as different ways of lending and people realized that they couldn't lend in the same ways that they were doing before? Are we going to see that again in 2020?
I think we're just going to see an acceleration of innovation, much like we saw in 2008, where suddenly there were pockets of various different markets that were being underserved by the banks, and so fintech came along to plug those gaps. And I think we will see again that there will be some retrenching from the traditional players, and fintech will be able to expand into those gaps and gain more market share, and also will be pushed to continue the innovation that the industry already shows to be able to ensure that they have the lending capital to service the clients that they're looking to lend to, because ultimately they need investors to come along and back them and give them the financing to roll out to their customers, and that's obviously where parties like Varengold come into play, and it's important for us to know and understand the credit quality of the portfolios that we're investing in, and rather than retrench ourselves and say no, we're not going to be lending anymore, we're still very much supporting the industry, but are very focused on asking our partners, how are you going to ensure that you can maintain the same credit quality that we want to see throughout this period, but also ensure that access to financing is there for those who need it, and in a sustainable way.
Yeah, that's a really interesting tightrope, because obviously all these alternative lenders have so much data now, I guess, that would you agree that they can actually almost provide credit to a lot of people? We've talked obviously about financial inclusion, but while also mitigating risk in a better way than there has ever been before.
Yeah, I think so. Absolutely. I think not only do they have more data points than we've ever seen before, but also the quality of that data and the currency of that data. If you're getting, say, live feeds from accounting software, then you know exactly what the cash position is of a business when you're taking a lending decision. That's quite a different proposition to taking a look at Companies House and getting stale data that could be 18 months old, and getting an Excel set of management accounts on which to base your decision making. So the fintech industry is and continues to push the boundaries of what data they can gather and how they can use that to power better lending decisions.
Brilliant. And going back to kind of what we were talking about with the comparison between CBILS and the rest of the world, how well do you think fintechs are being represented in CBILS, and from both a lending perspective, but also from the providing the lending as well, the financing?
I mean, I read something this week that said that Funding Circle has represented 16% of all CBILS lending in the UK. So I think that's a pretty great statistic. And obviously they have done a fantastic job in getting funds out to SMEs, and have taken up a large share of the capacity for the alternative lenders in the UK under that scheme. And I think that there are other players like Starling, like Tide, who have played an important role in those government programs as well. Then when I look at other parts of the continent, obviously Germany we look at very closely, and that has been, I'd say, a much slower process in getting alternative lenders on board with the programs, and everything has to be run past the KfW, so it's not as streamlined a process as we have here in the UK. And we've been looking at the Dutch scheme quite a bit as well, seeing where we can help clients over there. And similarly, I think the British Business Bank has really set quite a high bar for other development banks across Europe. And I know that there are always grumbles that Fintech lenders are not able to do more, and I think it is very difficult for them without access to cheaper liquidity to fund under these schemes. Certainly when it comes to the BBLS scheme, where you've got a fixed coupon, it's very, very difficult to find liquidity where you're constrained by a 2.5% per annum coupon. So I think there are areas which could have been improved on for sure. But I think it's been a great opportunity for the alternative lending industry, and I think they have really stepped up, and I think they have been allowed to participate fairly in the schemes.
Yeah. And do you think COVID-19 is going to increase the amount of data points that people are willing to provide alternative lenders or banks going into the future, because everyone's going to be working from home, people are going to get more used to digital technologies? Do you think this is going to be another string to the bow of alternative lenders going forward?
Yeah, for sure. I think we're already seeing lots of statistics coming out showing that acceptance of digitization across all different spheres has accelerated hugely through this period, out of necessity of people being sat at home. And if you're a small business and you need a loan at the moment, then you have very limited access to going to a branch to talk to a branch manager in the traditional way about getting that loan. So you're immediately thrust into the digital world, whether you like it or not, really. And my hope is that that people who are now getting exposed to what fintech can offer are seeing, actually, this is great, the service that I can receive. I never knew that I didn't need an in-person service, and actually my needs can be serviced much better by this digital industry.
Brilliant. And kind of following on from that, if I could ask you a kind of crystal ball type question, if I was going to ask anyone about this, it would be you. But when it comes to obviously financial inclusion as a result of lending, and obviously this increased inclusion rate because of the acceptance of digital, I mean, what's this going to mean for not just fintech businesses, but the business in the UK going forward?
So I think from a fintech perspective, I think lending is going to be back in the front of center of the fintech ecosystem, in the importance that it can play. So I do see that whilst obviously payments and reg tech and insure tech are all super important, and we'll continue seeing innovation and development there, I really do feel that fintech lenders will be at the front of the fintech industry for the coming months and years.
Varengold, I have heard that you guys you sit in a very interesting perspective, because there's a large section of fintech businesses that still remain underserved, as well as so is that what is that group, and can you tell us, how does Varengold look to support that specific group?
Yeah, well, I going back to focusing on fintech lenders, I think they're in a unique position within the fintech industry, that they not only need to be able to raise equity capital strongly to support the growth of their businesses and operations, provide working capital, but they also need to raise significant amounts of debt financing to grow portfolios. So naturally, they have far higher capital raising needs than most other fintech businesses, and that does cause challenges for them. The part that we play in trying to solve that problem is through working at a relatively early stage with lending businesses to plug that gap where they might have been able to finance a small portfolio with friends and family money, angel investor money, typically at a relatively high cost. And then they need someone to step in and start to grow the portfolio with them to the point where they can reach the broader capital markets and the deeper pocketed institutional investors like the pension funds, who typically aren't going to look at a transaction unless you're looking at a book of 100, 200 million. And there's very little liquidity in that space between sort of 10, 20 and 100 million. So that's where we see our role as being important for the industry in helping those lending businesses at that early stage grow portfolios and really consolidate their business.
Yeah, I mean, it's absolutely brilliant to hear that. And I've got to ask, why have the traditional financial institutions effectively missed that huge gap in the market? I mean, as you said, 10 to 100 million. That seems like a lot of businesses might fall within that category.
Yeah, there are a lot of businesses out there, but it's not straightforward to due diligence these models, because they all have unique selling points, and that's what they're all looking for is to bring a new product to the market that people haven't seen before, and bring it in a different way to the way that it's been seen before. And so you really need just as much time to due diligence a transaction that might be 20 million as you would for a transaction that might be 100 million, and you're running off much lower data points in terms of the track record of the originator and what they've done so far. So there are a lot of challenges with lending to these young lending businesses, but that's where we've developed a specialization to be able to do so in an efficient way.
Yeah, if I could actually ask you, what is the methodology behind that? Because, as you mentioned yourself, a lot of these fintechs are coming up with new ideas that maybe consumers don't even know they want yet, but when they get it, they do know that they want it. So how does Varengold, assess each one of these fintech lenders to see if they're right?
Yeah, so first of all, we have a deep understanding of the industry. We know what's out there already and what we do and don't like. So we can see quite quickly where new innovation is something that we think is really great and worth supporting or not. The key to our approach is in being flexible with how we onboard clients and how we meet their needs. So we're very customer centric in the way that we onboard new clients. And as I say, we've developed an approach that really specializes only in fintech lending businesses and is at the core of what our business is out to achieve.
Excellent. And I guess you kind of touched on it there, that the fact that by financing fintechs who are categorized by having incredible customer experience setups, you must be the best of the best, because if a fintech knows what they want from their customer experience when it comes to lending, they're not going to go to a bank that doesn't fit their customer experience expectations.
Yeah, I would like to think so. We continue to innovate ourselves and to make sure that we're always improving our customer experience.
Brilliant. Well, Alison, I think that's all we've got time for. Thank you so much for joining me today. And to all our viewers, you can catch the rest of the series over at www.fintechf.com, and make sure to catch the next episode. Thanks once again, Alison. Bye.
Thank you.